Boo. It's Wednesday, October 31st, 2007, and this is Brian Shannon from Alpha Trends Blogspot. Markets closed. We had another Fed meeting today, and the market survived it and actually did rather well. S&P 500 was up 1.1%. It did have a little bit of trepidation there at first. Came down just above that rising 10-day moving average, and on the 10-minute time frame, you see it's actually the 5-day moving average that acted as support. We had just that initial knee-jerk sell-off, and then the market was off to the races, closing above the recent little level of resistance that we've seen right in this area here. So I'd been looking at the 61.8% retracement level, and it seemed as though the market was finding a little bit of resistance there. However, we're going to continue, like we always do, give the benefit of the doubt to the buyers as long as we have a rising 5-day moving average. That's the intermediate term time frame. The buyers are still in control. And you can see that it touched right on that level and also at the level of support that we saw from the last day or so. So this level right in here, about 152.75 or so, is going to continue to be an important level of support for this market. Below that, we have about 152 would be the next level where you would expect if we get a sell-off, it would find support down in that area. And again, there's nothing on this chart that suggests there is a sell-off, but you always want to be aware of where the potential support levels are or resistance, just so you're never caught off guard and you're always prepared and have a plan in advance. The market right now, look at where we are. We're back to 155, and this was the level that was violated prior, that kind of precipitated this most recent sell-off. So we are at an important level once again as far as potential resistance. You saw that support was resistance here before and kind of intraday today as well. So I'm going to irritate a few people by saying that we continue to be in a stock picker's environment, although the environment is more favorable to long trades. Today we had really only one real bad one, which was Garmin. And this is the second big shock to Garmin in here lately. So I think if you're long Garmin, you got to take these little warnings, these downside gaps, pretty seriously. Things seem to be changing as far as a more distributive type phase in Garmin. The stock's had a great run, so just time to be a lot more defensive on a stock like Garmin right now. But the S&P 500 completely undamaged, nothing to do with that Garmin look right there. In fact, again, Google was up another $12 today. The drive ships I pointed out yesterday was up recovered $7. Here's the daily action, today's action that is, in the S&P 500 with the daily VWAP. You can see right before the Fed meeting, a little bit of nervousness, and then a sharp sell-off that recovered, pulled back, and then rocketed higher. So remaining above the daily VWAP and continues to be in good shape. So no reason to think that this market is going to fall apart by any means, but always remain defensive. It's defense that wins the game. The semiconductors continue to bounce higher, up, possibly heading up towards, again, that 475 level. That was prior support that may act as resistance. It was up about 0.75% today, and we do see now that the 5-day moving average is starting to flatten out. I still think that we're going to have another test of that 450 level. But again, semiconductors are not the most favorable place to be. A lot of good stocks out there. I don't know if you guys saw on my blog today, I'd mentioned that I'm the author of another blog called Squeeze Shorts. This BQI is something I mentioned just 3 days ago as a purchase candidate right in here. And this stock is up near multiple year highs, getting ready to break out with a big short position. So be sure to check that blog out because I've been putting some ideas up there as far as individual stocks go as well. Let's take a look now at the IWM, the Russell 2000. This has been my main area of concern for this market, but it does continue to hold up. And again, the 80 level is probably the most important level for this market. We are about to get a so-called golden cross, that is the 50-day moving average's dotted line, to cross up through this 200-day moving average. And again, I place zero weight in the importance of that. We had the death cross, as they call it, right about here. which is a so-called bearish event, and the market has obviously been much higher since then. So that's not a good timing indicator. If you see that anywhere, just kind of look at it and disregard basically. But the 10-minute, or rather the 30-minute time frame here, we are seeing that we still have these higher lows in here. We do still have a rising 5-day moving average. Yesterday I said that we have to be cautious because it was at a place where it could potentially turn back lower. However, the rising 5-day moving average does give us a little bit more confidence in the intermediate term trend. You can see it closed right on it yesterday, and it tested it once again today right after the Federal Reserve meeting. So this level in here, 81, is going to be your first important level of potential support for the market. Then again, the bigger number is actually obviously 80 on the daily time frame. You can see now that this trend line in here that I just drew in is kind of going to be met at the same level right in here as these lows. So we did touch that trend line today as well. Here's a look at the 1-minute action, very similar obviously to the S&P 500, except this one came down, found some support at that VWAP, and then continued higher into the close. The NASDAQ 100, just a solid bullish trend here. It just, it seems to grind higher, and as I said a couple days ago, that maybe the low volume in here, you always want to be concerned when you're seeing a market rise on low volume, but it's not a reason to sell short. Never sell short a dull market, and it's not a reason to be looking for a top that maybe, in fact, it was sucking in more shorts. And if people were selling short based on the low volume nature of this little grind higher in here, well, today they paid the price for fighting the trend. The time to sell short will come. It's not now. If you want to sell short, you got to pick on the weak stocks. Sell short the stocks that are in downtrends, that are getting beat up. It's still a mixed market out there. There's still stocks that are in downtrends, but S&P 500, NASDAQ 100, Russell 2000 are all in good shape. This NASDAQ blasted past the afternoon, the mid-morning highs after that Fed meeting, and that acted as support as well. So again, we have a very extended market here. We get extended markets, though. These markets continue to rally longer than most people expect, long after all the shorts have been squeezed out. But this trend is higher, and it's extended, so just continue to keep your guard high and protect all of those great profits they have accumulated.